and welcome to Budget Highlights. In his third budget, the Union Finance Minister, Mr. Arun Jaitley, has made quite a few predictable as well as unpredictable changes in the Income Tax Act as well as the international taxation regime. Although he did not extend across the board tax relief to all individual taxpayers, but certain tax concessions have been granted to the select communities of taxpayers. So far as the rich are concerned, they are in for a mild shock. Small taxpayers and professionals would certainly welcome some of the announcements made by Mr. Jaitley today. Corporates may feel slightly disappointed as the much talked about corporate tax reduction plan is not there along with the MAT rate reduction plan, but certain other benefits have been granted to the corporate apart from the phasing out of some of the tax concessions. If we look at some of the new manufacturing units, the government has come out with some of the tax concessions. Likewise, for the startups, as already announced by the Prime Minister, there are certain tax concessions. But one surprise element which one may come across in the finance bill and also announced in the budget speech is the tax compliance window. Like the black money, the scheme last year in 2015, this year the finance minister has brought this BDIs-like scheme for mopping up black money in the domestic economy. But to talk about little more of some of the key provisions and the changes proposed, we have three experts with us, noted experts with us in this studio. We have Mr. R. Sridhar, Vice President, Hindustan Coca-Cola. We have Mr. D.P. Sengupta, former Chief Commissioner of Income Tax and also Joint Secretary TPL. We have Mr. Sunil Chopra, retired Chief Commissioner of Income Tax. But before I go to my experts for their prima facie reaction, let me give you some of the key highlights and the changes proposed in the finance bill. So let me start with the personal income tax. The finance minister has proposed an amendment in section 87 to provide a major hike in the rebate limit, which has been hiked from rupees 2,000 to rupees 5,000. So straight away a benefit of rupees 3,000 to all those taxpayers, individual taxpayers who had an income up to rupees 5 lakh. Then the finance minister has proposed a kind of 80GG benefits, which used to be there for all those individual taxpayers who did not own any property, but they used to pay rent. So the limit was 2,000 rupees, that has been increased to 60,000. So straight away a huge jump of rupees 3,000 here. The finance minister has also made very drastic changes in the presumptive taxation regime, which has been extended to the professionals, a welcome change for the professionals, having receipts up to rupees 50 lakh and the deemed profit of 50%. Then another change which is very interesting is the additional tax on dividend received by individuals in excess of rupees 10 lakh. That means that if we look at this economic survey where the chief economic advisor who tailored that report apparently came out with certain findings where the government of India has been extending huge amount, little more than 1 lakh crore subsidy to the rich taxpayers. So probably keeping that in mind, the finance minister has hiked, extended the tax on the dividend received by the rich individual taxpayers having income up to above rupees 10 lakhs rupees. Then another interesting change is that surcharge. Surcharge for this kind of rich individual taxpayers has been hiked from 12% to 15%. The most interesting inclusion, which was never guessed and nor speculated about, is that the phrase compliance window scheme for tapping and unearthing the huge amount of black money. Interestingly, the government decided not to make public 3 studies which were done to quantify the size of the black money, the parallel economy in India. Nonetheless, the government has decided, and since the government has come out with this kind of a scheme, that itself is an indicator that probably the government believes that there is a huge amount of cash economy which we have in India. To tap that, government has come out with this, the declaration of undisclosed income scheme, and the tax which is going to be imposed is in the range of about 45%. Let us now move quickly to the corporate taxation. Although the government did not unfold the corporate tax rate reduction plan which was promised in the last budget, however, so far as new manufacturing units are concerned, incorporated, from the 1st March 2016, they are going to be taxed at the rate of 25% plus surcharge plus cess, subject to, of course, certain conditions. Corporate tax rate has been reduced to 29% for all those small enterprises which are having turnover of not more than rupees 5 crore. It's a small relief, but the mega relief which is available now for the corporate sector, and which used to be limited, the section 80JJAA benefits, limited only for the manufacturing sector. Fortunately, since there has been a lag between the economic growth rate, equity is missing, and the lag between growth rate and the job creation, the government has decided finally to extend 80JJAA benefits to all statutorily audited SSCs under the Income Tax Act, which basically means that all kinds of service providers are also going to be eligible for availing this benefit if they are going to generate jobs. Let's move to this next point, which is very relevant. The turnover limit, for under section 44 AD, it has been hiked from 1 crore to 2 crore. It's a substantial jump. Again, the focus is on helping out small enterprises. Then the government has finally come out, which was already made public a few months back by the Ministry of Finance. CBDT had come out with the phasing out plan for some of the tax exemption, and one of them was accelerated depreciation. So as per this finance bill, this is going to be limited to 40% with effect from 1st April 2017. So probably the government is going to mop up extra revenue next year, when probably the finance minister will come out with some corporate tax reduction plan. Next is, of course, the benefit of long-term capital gain, which used to be available for 3 years. That period has been reduced to 2 years. Now, the patent box regime. Interestingly, India has finally introduced the patent box regime, whereby the 10% tax is going to be imposed on income generated out of exploitation of worldwide patent rights by a resident Indian company. The next is, of course, section 14A related disalliance, which has become a folklore. Assessing officers have been making left, right and center all kinds of disallowances, sometimes more than the actual amount of expenditure. So this time the finance minister has proposed certain amendments to limit it, this kind of disallowance, to 1% of the average monthly value. The next is, of course, the interest rate. I am sure the industry and trade is going to welcome it. The interest rate government has proposed of 9% in place of 6% for the delay in refund, in giving, the refund actually arising out of delay in giving effect to the appellate orders. So quite often, quite a few cases are there where this kind of delay is a kind of routine exercise in income tax department. So the finance minister has proposed a higher interest rate of 9%. Let us now move quickly to the international tax regime. Interestingly, it was suggested in the BEPS project by the OECD last year. The report came sometime in December, and let's give credit to the Indian Finance Minister for taking a few important leaps from that BEPS project report and implementing this principle and concept of equalization levy. The government, this is particularly with respect to the digital economy, which is becoming a parallel economy worldwide. So the government has proposed 6% equalization levy on gross amount of payment made to non-resident exceeding rupees 1 lakh, but only in case of B2B transaction. Another interesting point, of course, which was proposed in the last year budget, and CBDT had come out with this certain guidelines with respect to the POEM, which is place of effective management. The government, probably because of lack of clarity, industry and trade, they objected to certain points and they wanted greater clarity. So taking into account this kind of objections and the reactions coming from various quarters, the finance minister has decided to defer it by 1 more year. And of course, he also announced the GAR is also going to be implemented from 1st April 2017. So probably a POEM and GAR will come together. Then another interesting point is he has proposed that it's a mega relief for all those non-resident taxpayers who had no PAD allotted by Income Tax Department in India and they were subjected to higher TDS provisions, so higher TDS rate there the income tax, the finance minister has said that in case the non-resident is able to produce some other alternative document, then they will not be subjected to higher withholding tax rate. However, interesting point with respect to BEPS is that the action point 13, which is related to the country by country reporting, finally India has implemented it, and there is a proposal that in case of the consolidated revenue happens to be euro 750 million and higher, only then this country by country reporting will come into play, which is of course not going to affect too many taxpayers. Given the fact that litigation has turned out to be a major bane for revenue collection in India, and this adversarial tax regime, which normally most of the trade industry and foreign investors talk about with respect to Indian taxation system, the finance minister has relied more on dispute resolution scheme. It's an alternative dispute resolution method, and there he has proposed that there would be no penalty. Now, budget is out, finance bill is out, it is being studied by experts. We will go to some of the experts for their prima facie views, although they have not gone through the finance bill, so it's too early to go deeper into it. But prima facie, how they look at it based on the finance minister's speech and some of the other documents which are available now with all the experts. So, let me start with Mr. Siddha. Prima facie, let me have your opinion, the views on this.
I would say that the provisions regarding 206C, where they are sourcing information with regard to purchase of costly vehicles, that will be a very good provision. It's an anti-evasion measure. Then with regard to substitution of bank guarantees, whenever there's an attachment of immovable property, rather than attaching the property itself, that's a very good provision.
What about this phasing out of exemptions?
I would still feel that this is as far as the stated objectives are concerned, but one thought could have been also given to the larger issue of how much MAT can go down when corporate taxes are going down. So that aspect of it has not been looked at. But if you look at from the overall other points which are supporting the corporate sector, at least some clarity has been given on the penalty provisions, how the government intends to, because the fine print needs to be studied though, because 271 has been removed and a new section has been brought in. Those kind of certainties have been brought in.
With respect to BEPS, as Mr. Siddha said that it was a little fast, probably industry and trade could have been given a little more time to think about it, to prepare themselves before some of the BEPS related measures could be implemented. So, as the finance minister announced quite a few steps, how do you look at it, sir?
I think, I am rather surprised that there is no action on certain suggestions, important suggestions of BEPS. Like, for example, there is nothing in this budget relating to the CFC. There is nothing in this budget relating to limitation of interest deduction, which is one of the important ways in which money is taken out of the country. There are, in fact, if we go one by one through all the action points, then I find that there are only one or two that have been touched. So, I think we could have done more, because in any case the government is starved of the revenue. But I think they want to balance the revenue considerations with the investment focus also.
Right, sir. But so the measures which have been taken, how do you look at them, sir?
There are two or three areas where two areas of the BEPS action plan where measures have been taken. One is relating to action point 13.
Yes, sir.
The country by country reporting. These has been widely reported, and yes, almost everybody has been talking about it. The government of India has stuck to whatever has been recommended by the OECD,
right, sir,
and the group limit of revenue has been kept at 750 billion euros,
right, sir,
which according to them translate to around 5,395 crores.
So this threshold
is huge actually.
So very few companies will actually come under the radar in that case.
Yeah, there will be very, not too many companies will actually be affected by
Yes, right,
the CBC report. The interesting thing is relating to the digital economy.
Right, sir.
Actually, the entire BEPS project started because of the possibility of significant presence in a country because of these information, communication and technology platforms. That means you don't need physical presence in a country to partake of its market and other things. So that's the reason why the digital, the BEPS project started. But it is true that the OECD finally could not come to any definitive conclusion, and it needed more
time, sir,
more
actually,
time.
yes, exactly.
But they have given the countries the 2-3 options.
Right, sir.
One of the options was an equalization levy,
right, sir.
and withholding tax was another option. A significant presence, economic presence. So this is an equalization levy. Actually, it's not very well known. There are countries, as you know, the UK and Australia. They have introduced diverted profit tax.
Yes, sir.
I do not know if any other country has got equalization levy, but it is a good first step.
Right, sir.
You will have to see how it ultimately plays out.
Fine, sir. So let me go back to Mr. Chopra. Sir, you please tell us, prima facie, quite a few changes have been proposed with the corporate tax structure. For instance, another VDIS, of course, the finance minister said, another compliance
Should I
window.
also mention about the very good points of this finance bill?
Right, sir.
I'll mention about that first.
Please do that, sir. So please tell us minimum 2 to 3 points, sir.
Yes. So first thing is that he has done a very good job in not succumbing to pressure that the exemption limit should be raised. Because as the economic survey pointed out only 3 days back, when the last time exemption limit was raised, it led to exodus of 1.65 crore taxpayers from the tax net. Our base of taxpayers is not very large. There are about 3.38 crore taxpayers, and if you take the number of returns and persons who have paid TDS but not filed a return, the number is 5.2 crore. 2. He has also done another good thing, that he has proposed number of things for raising revenue.
Okay.
For example, on dividends, which were so far exempt,
Right.
now above 10 lakh rupees, they will be charged at the rate of 10%.
10%.
Mr. Sridhar mentioned about enlarging the scope of this 206C
206C, right.
for luxury cars.
Luxury cars.
He has also brought in, though there was a notification issued in the recent past, he has also brought in purchases of goods and services made of the amount of rupees 2 lakh and above.
Yeah, right.
This will further augment the revenues.
Right, sir.
Third, he has restricted insofar as reducing the corporate rate is concerned to 29% only in the case of those companies whose total income is up to rupees 5 crore.
Right.
So the very large companies will not have this tax advantage. Simultaneously, he has proposed phasing out some of the tax incentives. He has proposed putting sunset limits for some of the tax incentives.
Right.
And he has also proposed bringing down the limits of weighted deduction with regard to certain incentives.
Right.
Another very positive feature of this budget is enlarging the scope of presumptive taxation.
Any other areas of
See,
regulation that you see from corporate perspective?
Corporate perspective, I would definitely, I really welcome this whole rethinking on this penalty provisions. I must say so, because if you really look at most of the litigation is on penalty, and hardly there are any penalty cases which are won by the revenue at the highest level. And I think from a point of view of giving certainty, there is some clarity, I thought, with regard to this exempt and taxation aspect. Though this has been discussed in the past, though this has been thought of in the past.
It was a part of DTC also.
It was part.
Yes.
But then the larger aspect of it, I don't know whether from the timing point of, because it says as far as as far as the contributions after 1st April 2016, 40% shall be exempt and 60% shall be subject to tax. It says.
Right.
Now, but then nowhere does the speech say that as far as his contribution, accumulated contribution prior to that, or say as on 31st of March 2016, there is an absolute moratorium. They won't touch that corpus.
So I think the prima facie, I mean, we have touched upon
Insofar as the international tax aspect is concerned, one or two other points. One is very important issue is the residency test for our corporates. We had only last year got into changed that to the place of effective management. There has been a lot of lobbying against that, and we find that this provision has been deferred.
There's one aspect with regard to the employees, which we thought is also a very good aspect, which Mr. Jetty touched upon in the speech. That is for the enhancement of 80GG in respect of people who do not have own houses. That's something really creditable, because in India the cost of housing is going up and not everybody gets a house rent allowance.
That's true. But sir, another points, which you talked about, that the extending the benefit of Section 80JJAA. To what extent this will actually really help in terms of generating?
It's not clear, because earlier it was meant only for the manufacturing concerns.
Right, sir.
Now it has been extended to all the concerns, including trading concerns.
Right,
I think the idea was to promote employment in all sectors.
Correct, sir.
That seems to be the idea.
One more thing is also which we missed because of the time, I may say so, bringing down the period of holding for unlisted securities from 3 years to 2 years.
The long term, the capital gains.
And another very positive point about this is a policy statement of again reducing the cost of compliance by means of e-assessments. He said for the 7 metropolitan towns in the country, there will be e-assessments, which was only being done on a very small basis till now.
Right, sir.
So that will ease compliance for a large number of taxpayers.
Maybe Mr. Sridhar, industry perhaps will welcome it. This 9%, the interest rate as against 6%.
Definitely.
There's another positive measures.
And coupled with it, Mr. Kumar, that the officers who are responsible for this would be liable to explain as to why they have done it. Because so far, a number of problems were there, whether of high-pitched assessments or things like that.
Correct.
Because nobody was responsible. And now I understand that even the annual confidential reports are being amended to include these kind of actions on the part of the assessing officers. So coming to the negatives, the very disturbing part is the relaunch of the income declaration scheme or income disclosure scheme.
Right.
Because number one, in the past, the last time this scheme came, the government had given an assurance that it will not bring such schemes again in the future. The last year's black money scheme was different in the sense its target group was different.
Right.
It was meant for funds parked abroad or incomes earned abroad. That was different. But here, to bring the scheme once again, acts as a disincentive to honest taxpayers. Acts as a disincentive in the sincerity of the tax officers to bring out tax evasion.
On top of this, probably the government should have also come out with this white paper. At least the studies should have been made public. It should have been, the 3 studies which were done with respect to quantification of the black money. Probably it could have been made public. So, nonetheless, so let me thank all the viewers. Prima facie, we have the views of 3 very noted experts, seasoned experts, who will go deeper into the finance. We'll come up with more episodes in the coming days. But of course, prima facie, we have some of those important points and the views without giving any rating to Mr. Jaitley. It's too early for us to give any rating. So, thanking for watching TIOL.